Welcome back to Money Hack Japan. Today, we're diving into an exciting topic that could reshape your investment portfolio, the upcoming IPO of SpaceX. As many of you know, SpaceX has been a game changer in the aerospace industry. But what does its public listing mean for investors? Let's break it down. First, let's consider SpaceX's recent achievements. The company has successfully launched numerous missions, including cargo resupply missions to the International Space Station and the deployment of the Starlink satellite constellation. As of October 2023, SpaceX has over 3,000 satellites in orbit, significantly enhancing its revenue potential through global internet coverage. This has set the stage for a robust financial foundation, making their IPO highly anticipated. Now, what does an IPO really mean for SpaceX? An initial public offering allows a company to raise capital by selling shares to the public. For SpaceX, this means they could potentially raise billions, which they could reinvest into further innovations, such as their Starship program and Mars colonization efforts. However, with IPOs come market scrutiny and volatility. Investors will need to weigh the excitement against the risks involved. Let's talk valuation. As of the latest funding rounds, SpaceX was valued at around $137 billion. However, valuations can fluctuate significantly upon public listing due to market sentiment. To make a sound investment decision, we need to analyze SpaceX's financial health. Recent reports indicate that in 2022, SpaceX generated approximately $2 billion in revenue, primarily from satellite launches and government contracts. Analysts expect this to grow exponentially as more commercial contracts are secured and Starlink expands. Now let's look at the competitive landscape. SpaceX is not alone in the aerospace sector. Companies like Blue Origin and Rocket Lab are also vying for market share. However, SpaceX holds a significant advantage with its reusable rocket technology, which drastically reduces costs and increases launch frequency. This competitive edge could be a critical factor in maintaining and growing its market share post-IPO. Another aspect to consider is regulatory approval. The aerospace industry is heavily regulated, and SpaceX has been navigating these waters effectively. Their successful launch of the Starship system is a testament to their ability to meet stringent regulatory standards, which could bode well for investor confidence as they transition to a public company. So, how should you position yourself ahead of the SpaceX IPO? Here are a few actionable strategies. 1. Research and monitor. Keep a close eye on announcements from SpaceX and market analysts. Understanding the timing of the IPO and any pre-IPO share offerings can give you an edge. 2. Diversify. If you're considering investing in SpaceX, ensure your portfolio is diversified. Investing all your funds in one company, especially in a volatile sector like aerospace, can be risky. 3. Evaluate financial metrics. Pay attention to key financial metrics post-IPO, such as PE ratio, revenue growth, and profit margins. This data will help you gauge whether the stock is undervalued or overvalued at launch. 4. Stay informed about market trends. The aerospace sector is influenced by global economic trends, technological advancements, and even geopolitical factors. Keeping abreast of these can help you make informed decisions. 5. Consider timing. Often, the initial trading days can be volatile. You may want to wait for the dust to settle before making a significant investment. Look for signs of stability in the stock price before committing larger amounts. In conclusion, the SpaceX IPO presents a unique opportunity for investors looking to capitalize on the growth of a pioneering company in the aerospace sector. However, as with any investment, it's critical to conduct thorough research and remain aware of the inherent